Hello traders, Cousin Vinny coming to you from theclosingprint.com on December the 1st, 2019. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, fading a little bit on Friday. Big cap tech names moving higher for the week as well. We did have the bond stock ratio moving lower. That's bullish for equities. HYG and junk are also bullish. We have the Dow Composite bullish above its 9 EMA 21-day. NYMO and NAMO are starting bullish cycles. They look like they're starting to bottom. Breadth thrust pulled back to zero. We're looking for a push higher again. And NYHL is in a bullish cycle, showing more new highs than new lows. NYAD advanced declines above the red zone, did fade a bit on Friday. The put-call ratio is neutral. We have VIX moving up a bit on Friday to 1262 off of a cycle low, while SKEW peaked on Friday, showing institutions had started hedging a bit, but it did start to fade at the end of the day on Friday. We got the US dollar at 98.20 at a range high. It got rejected at the highs, but it does remain above the 20 and the 50-day. Yen is below the 200-day. That's bullish for the Nikkei. As you can see, that moved higher. British pound, US dollars in a range. The FTSE, London Stock Exchange showing no trend or momentum. Bonds are showing distribution patterns, phase 3, with the 10-year yield bullish for equities long term. Gold is in a 14-week descending channel. That continues to move lower. The heat map is improving slightly with healthcare and leisure and entertainment bullish last week. In addition, we'll look at some IBD 50 names and some MarketSmith relative strength stocks, as well as some top 20 volume percent gainers last week. Bukowski is showing 505 green with the CPI signal green since October the 9th. It did move from 58.8% to 37.5%, which is neutral according to Bukowski, with 5 bearish patterns, 3 bullish patterns, and 516 patterns waiting for breakout. It's this last number that looks pretty interesting going into the first week of December. Starting off with the ARCA Institutional Index, the stocks over on the left. These are the 75 stocks most commonly held in institutions' core portfolios. The importance here is once we see a red stick, we become more cautious. At the present time, we can clearly see that price action, green and blue elder sticks, are staying within standard deviation 1 and 2 bands. Standard deviation 1 being the dark area, standard deviation 2 being the outside bands. Get cautious when it moves inside of the bands, but be open to trend continuation. We can clearly see since the beginning of October, we've traded 35 days above the 9 EMA without a close below. Therefore, we're still bullish going into the first week of December. The S&P 1500 Composite also shows you a green signal line above the red line up and to the right. This is a bullish indication confirmed by histogram in the middle and price action below. Again, blue and green elder sticks above the rising bullish 9 EMA with no closes below, only tests of same a week ago. Again, spiders 35 days after gapping above the 9 EMA with no closes below the 9 EMA to date. We've managed a breakout, Fibonacci's 0% from 284.82 the beginning of October to the breakout zone 302.63. 1618 extension was around 314. We exceeded that last week, printed a high of 315.48. While we did end the week on a red candle, I'm thinking that that was just the end of the month window dressing. We'll have to see and confirm on Monday morning whether or not we'll see a follow-through. MACD is above its signal line. Volume looked pretty decent Monday through Thursday. Friday was below average when we printed this red candle. RSI is embedded, showing muscle. In addition, in this 60-minute time frame in the bottom right corner, we can see tick cumulative is still rising, pushed through the zero line last week. That's telling you institutions are buying more stocks on the uptick and they're selling on the downtick on a cumulative basis, rendering a bullish verdict for the week ahead. Nasdaq 100 showed 7 weeks higher, a rest week on a doji, spinning top, and then a follow-through last week. RSI still has potential to run higher. Volume has been pretty good over the preceding 7 weeks. Last week we saw below average volume. MACD is above its signal line while price action continues to rise. The Russell 2000 ETF 162 was printed last week. This is a breakout above these 4 X's. We're on a buy signal and expect to see small caps continue to move higher into year end. Despite the fade that we saw on Friday, again, I attribute that to month-end window dressing, institutions and fund managers accumulating some cash to put to work. The beginning of December, 3 weeks tight breakout. RSI has plenty of room to run. Volume looks pretty decent, and MACD is above its signal line and rising going into this first week of December. So look for small caps to follow through. The Dow Composite, 65 stocks from the industrials, transports, and utilities groups, a reflection of Dow theory, continues a bullish trend. Each time it pulls back into the vicinity of the 20-day moving average, the center of the Bollinger Bands, or the 9 EMA, it bounces and follows through. On Friday, we pull back to the 9 EMA. Looking for a bounce in this bullish trend and for RSI as a function of price to turn back up. Volume was pretty decent Monday through Thursday. Lower on Friday. Again, giving us the indication that this is probably institutions just taking a profit at the end of the month. Breadth thrusts, advanced decline percents, S&P 500, mid-cap 400, small-cap 600, and the Nasdaq 100 in the lower panel all pulled back on Friday. We're looking for a bounce. This is actually pretty good. We want to see a start to December where we're not overheated above the 30% line and have the potential to bounce at this point. So breadth is starting to show us that. We can also see it in this index, which happens to be all the common stock that trades on the New York Stock Exchange. There's more than 3,000 stocks total. This is the advanced decline line. We can clearly see that we printed an all-time high on Friday. So breadth does look pretty good when you look at the whole spectrum of stocks that are trading on the New York Stock Exchange. The momentum indicator, PMO, on the bottom is turning up as well. And we have the Nasdaq Composite, over 2,700 stocks on the composite, starting to show a bottom here, and looks like it's starting to turn higher. Like we saw previously on turns in June, mid-August, and the beginning of October, led to higher prices. We have green and blue elder sticks, again for the Nasdaq 100 in the lower panel, showing us a reason to be more bullish than bearish. NASI, the summation index, has also crossed over and is turning higher. NIMO for the New York Stock Exchange Composite, also giving us the same indication. Cycle is turning, black line, green and blue elder sticks, and NYSE, the summation index, is turning higher to start the week. In addition, another measure of breadth is the new highs, new lows. Simple calculation, take new highs, subtract new lows. It gives you an indicator clearly above the zero line, not below like we were back in December last year or in May and August. We are seeing higher histogram bars, and we close the week with the moving averages following through and moving higher. New York Stock Exchange advanced decline is a bit skewed because it does have ADRs, prefers, and mutual funds in the mix. That said, it did turn down on Friday slightly. We did get a blue elder stick on the New York Stock Exchange, so we'd like to see this stay blue or turn green on Monday to start the first week of December. Finally, our short-term Vix indicator, 1:VIX, that flips the VIX in the same direction as price action. So when it's red, you'd expect to see lower low and lower highs. This is a 60-minute time frame. Not to worry if we open up in the morning and we start to see breadth improving and Vix dropping back, this indicator will turn back up and give us a green signal like we had all week, where we had higher highs and higher lows. VIX daily did bounce a bit. People more than likely got a little scared on Friday. Again, I'm just thinking that this is institutions selling some shares of positions that they want to get rid of so that they have money to go forward into the last month of the year, December, before bonus time. Take that money and put it to work. We'll see if that happens on Monday morning once we see a confirmed trend for the day. The 10-year to S&P 500 bond stock ratio is in the lower panel. The red line is dropping. That's bullish for equities to start the week. High yield corporate debt is also bullish, rising above its 20-period moving average. Trend line has stayed intact. This was drawn in several weeks ago. We said that if we continue to hold these pivots and this trend, RSI stays bullish, that this is telling you that investors are chasing yields. As the Fed is lowering rates, they have to go somewhere to find that higher interest rates. They're finding it in HYG and junk bonds. While the 10-year yield continues to make more of a bullish trend, yes, it does come back. It won't go straight up. There are periods back in 2012, 13, and 16 and 17 where the 10-year did pull back, but the markets did manage to continue rising. 66% back in 2012 and 13, and over 48% back in 16, 17, and 18 as the 10-year continued to rise. Look for the 10-year to move higher this week. That would be bullish for equities. That said, it won't be the only thing that we're watching. The 20-year Treasury bond has been in what looks like a distribution pattern. This is phase 4 over here on the left, followed by phase 1 where you see a nice base. You can see these histogram bars on the left side. Once we break out of that base, that starts phase 2 on this weekly time frame. Then when price action reaches a peak and starts to consolidate, we see that as distribution and rebalancing by institutions and fund managers going into the last month of the year. Currently, the yield curve is flattening, but not inverted. Currencies have also been something of a headwind. Here we have the British pound, US dollar in a sideways range, but holding the 21-day moving average and bouncing on Thursday and Friday. RSI is above 50 and rising. You know that when RSI is above 50, price is above the 21-day, you need to be bullish. That would put pressure on the FTSE and the London Stock Exchange, which you can see move back below the 21-period moving average. The FTSE and the London Stock Exchange are basically flat in a sideways range, slightly descending. RSI is below 50. For now, if the British pound does break higher, expect to see the FTSE moving lower along with the London Stock Exchange over the next several weeks. If the British pound US dollar does fail, then we would watch for the London Stock Exchange and FTSE to break out in the short term. The other side of that Forex pair is the US dollar, of course. We did see a retreat from the upper Bollinger Band on Friday. We are above the short-term moving averages and the 50-day. So if you're bullish for equities and commodities, you want to see the US dollar drop back towards the 200-period moving average like we tested back in October, November. A rip to the upside would put added pressure or a headwind on equities. So I'm personally looking for this to drop a little bit lower this week to help us with the month of December in US equities. A move lower in the US dollar should also help copper. This is a leading economic indicator that we watch from time to time. It's been in the sideways range for the past 6 weeks, 8 weeks. We need to get above this 270 zone, 272, above this volume by price level. If it does do that into the month of December, that would be very bullish for home builders as well as construction and building products group, which tend to lead. While many are expecting that to happen with lower interest rates, we'd also expect to see gold moving higher if the dollar does manage to head back down towards the 200-day moving average. Do note that gold and Sierra Nevada and Kirkland Lake Gold, among others that are in the IBD 50, could continue higher this week, so keep an eye on them. as all eyes will be on the US dollar, and gold continues to be in this 15-week descending channel. Testing the moving averages on Friday, looking for a move above the 50-day if you're bullish for equities. Do note you have major resistance overhead right along 1490 and the 50-day converging at the same location. Note RSI is rising and volume is starting to pick up. MACD is turning as well. West Texas crude for the previous 5 weeks was above the 20-period weekly moving average. It closed below last week. With everything else bullish, we want to see crude oil moving higher as well. The sector heat map has been improving slightly, continuing to see healthcare outperforming. Clearly, small cap, large cap biotechs, we had medical devices, pharmaceuticals, healthcare equipment, and healthcare providers all doing well last week. We also saw leisure and entertainment showing us some improvement, as well as the media, PBS. Home builders also did a little bit better. International markets also improving a bit. We did see Argentina looking very strong last week. For the third week in a row, you can see 3 white soldiers showing up on the weekly time frame. We've got something of a multiple bottom. 1, 2, 3, 4, 5 levels tapped and reversing. That's a good sign. MACD is above a signal line and rising. Stochastic is higher and volume is increasing. So if you're thinking about an area where to put some of your money, maybe Argentina's one, ARGT. This ETF seems to be outperforming going into the holidays. Here are the individual sectors. You can see very clearly all of the charts are moving up and to the right. That's bullish, with the exception of energy, which is lagging. Everything else looks pretty strong. We got utilities falling off. That would be a defensive sector along with staples, but utilities continue to move lower. Everything else looks pretty sharp. We see some outperformance in healthcare, of course, technology, industrials, financials, communications. That's Netflix, Disney. Disney's a good setup, by the way. I was looking at that for a potential pullback for an entry. Transports look okay. They're at the highs, and we have materials also moving higher. So the sectors look pretty good going into the first week of December. Here is the IBD 50 list for the week. Again, the thing that we're watching for is stocks that are moving up and to the right in the top corner of our charts. We'd like to see price action near the 9 EMA over the last week or so, potentially bouncing off of that area and following through. Preferred setups like CarGurus have pulled back to the 9 EMA. We see buying action on Friday. More than likely, this is going to follow through and move higher. Note, RSI is showing muscle. It can stay embedded for a long time, a lot longer than the shorts can handle it as price action moves higher. A good example is Clovis last week, which moved higher. You can see the muscle was no indication that this was going to turn back anytime soon. Volume and price is what we need to pay attention to. Up and to the right, Clovis looking really good last week. A good 15-day trade, literally 15 days from $4 a share up to $16.60 last week. We also want to see above average volume, which will tell us institutions have been buying shares. You can see BABA, how that ripped to the upside this week, while other stocks like Chipotle paused. I'm expecting to see restaurants and bars doing well this week. One of the reasons why I asked everyone this weekend to check out your local Starbucks, your local Cheesecake Factory, Darden Restaurants, Olive Garden. Look at the parking lots and see what people are doing as they're out shopping, as that's one indicator that we watch for good sales and earnings for the quarter. We were talking about home builders. D.R. Horton back on the IBD 50. Looks pretty good. This one is flagging above its 9 EMA. You can see how it consolidated along the 9 EMA. RSI remained above 50. Volume and MACD above its signal line, indicating institutions have been picking up shares. Keep an eye on this one. We might have a nice setup, an entry, maybe a pullback to the 9 EMA, and then a bounce Monday, Tuesday, Wednesday. Hyco Corp, we're looking for a follow-through, holding along the 9 EMA. Note the wicks, top and bottom. We'd like to see a bullish candle to start the week. RSI is above 50, volumes picking up, and MACD is above its signal line. Euronet also strong. A nice bullish 9 and 21-day moving average. Price action, note where the wicks are, above the 9 EMA. These are buyers at the low of the day, continue to push this higher. We'd like to see a breakout and a continuation. Looks like it's building the right side of its cup. Here's phase 2. Last time it rallied to a peak. Distribution, phase 4. Then phase 1 started all over again. Accumulation of shares, institutions picked up what they wanted. And then phase 2 is starting again. So it won't be a straight shot to the moon, but we're looking for the right side of what looks like a cup pattern. And then eventually a handle near that 171.25 zone. RSI is rising. Volume picked up on Tuesday, Wednesday, and then fell off Thursday and Friday. Watch for a follow-through this week in EEFT. MACD is above its signal line and rising. The healthcare group continued to outperform last week. No exception here. Edwards Lifesciences continues this bullish trend, riding along the 9 EMA. It was off $1.32 on Friday. This can move $4 or $5 at a clip if we see a follow-through day on Monday, Tuesday. That could lead to a breakout and new all-time highs, 52-week highs. MACD's flat and volume looked really good to start the week, Tuesday, Wednesday, Thursday. Tapered off on Friday on that little pullback. Gino, I know you're in this one. In mode, we did sell at the 58 zone. It did pull back to the 21-day. We're looking to get into it. I missed this entry. I believe Gino did get back into it. Nice pullback to the bullish 21-day. This is the kind of action we look for with RSI above 50, volume increasing. We'd look for a follow-through and then a follow-through day or two. You got that last week. Now we see the 9 EMA holding price action, buyers stepping up at the low of the day on Wednesday, Thursday, Friday. Looking for a follow-through now and test that upper ATR band at 6140 potentially. ServiceNow also looks pretty good. We've got a nice bullish sideways pattern. Thursday and Friday, buyers stepped up. The 9 EMA is rallying very quickly underneath price. RSI still has room to run. If it gets above 284.30, I would look for a test of 303 in the weeks to come towards the end of the year. MACD's above its signal line. We had a big spike in volume on the gap up. Looking for follow-through now as the gap and go is potentially telling us a follow-through is imminent. Planet Fitness for the last couple of weeks. This was on the watch list. Looking for follow-through. Nice little breakout on Tuesday, Wednesday. Doji spinning top on Thursday. Another spinning top on Friday. Could just be selling at the end of the month. RSI is showing muscle. MACD's above its signal line. We'll look at this one. If it does test the 9 EMA and we do see buyers stepping up like previous times, we'll look for a follow-through. So this isn't my favorite setup, but it's something that we're definitely watching. Restoration Hardware showing muscle. Everybody by now knows Warren Buffett started the position in Restoration Hardware, RH. You can see the volume. MACD's above its signal line. We'll watch how this one plays this week, whether it breaks higher or lower. Bullish above 205.60, bearish below 205 or so. If the latter, then look for a test of the 9 EMA. Royal Gold, we're looking for a breakout. Draw a trend line through the bodies of these candles. Looking for a break above 121, 122 to signal a continuation. Note the 21-day is starting to turn upward. This is the kind of setup we want right here, like we saw back in late May. Price action moves above the 9 EMA and then starts trending. We'll buy on any pullback and add along the way. So it looks like Royal Gold is starting to do that. If we see the dollar move lower, remember, that would be a sign that we could see gold break out and a lot of these gold stocks go with it. SolarEdge, I know a lot of people, including Robert in the live stream room, were trading this one over the last few weeks. Looks like SolarEdge is going to continue higher again, looking for the 21-day to move higher. The 9 EMA is about to cross through the dashed blue line. If that were to occur, we're looking for a trend to develop again into year end. StoneCo, Brazilian company. This one does look like it's about to break higher. It reported earnings on this big white candle. Consolidated over the last week. We're looking for a break and RSI to remain above 50. Volume to pick up. MACD stay above its signal line. Watch for elevated RBOL relative volume intraday to start the week. Visa and MasterCard, PayPal, all of the payment card processing companies should continue to move higher. American Express, etc. into the holidays. People will be using their plastic. That includes MasterCard, which we thought might pull back to the 9 EMA. This is a perfect example of what we look for. RSI remains above 50. Prices above the 9 EMA. Breaks out, comes back and retests the 9 EMA. This is a perfect entry here the following day. When you get a bullish day, then price action moves higher. We got to stop below the low of the day, and you just ride this Tuesday, Wednesday, Thursday into Friday. Note that most of the stocks were lower on Friday, and MasterCard and Visa moved higher, which is showing relative strength, and most likely will continue to move higher. Watch 293.33 here for MasterCard. RSI is just about to hit 70. Volume is picking up. MACD is above its signal line. I think this is just going to keep going for what looks like a cup and handle pattern potentially to start the first week of December. Some additional stocks we're watching. If you have a MarketSmith subscription, just come and check out the 100% volume screen. This was pretty good. It gives you an idea what stocks are moving higher. You can see down here, volume percent change versus the 50-day. SORL, auto parts, big blast in volume. Even after a miss in EPS, they liked something. It's a $4 stock. I'm not going to chase it here. But if we do see a little flag over the next few days, that might be something of interest. HFFG Foods, this one looked pretty good too. Looks like it's going to continue the trend. We have ORMP, Oramed Pharmaceuticals, following through. Clovis, of course, was on the 100% volume screen. That looks like it's going to continue higher. AKBA, this one looked pretty strong last week. Looks like it's going to follow through. Akebia Therapeutics develops and commercializes novel therapeutics for patients with kidney disease. Looking very interesting there. JCS, nice follow through. Communications, modular connectors, wiring devices, etc. Also keep an eye on KEM. That one was at highs. I know Rick Stevens over there in Florida, you're one of your favorites. This one's continuing to move higher. MITO, MITO. Follow through. Looks like this one's going to continue higher. Not the highest volume trading stock, but it does look like it's going to continue higher. MTEM, another one. Modular templates continues to move higher. Look at the volume over the last week. Volume precedes price, most likely going to continue higher. That's not a promise or a guarantee, by the way. You got to see it first. Got to follow through on Neoleukin Therapeutics, NLTX. This one looks pretty interesting. $6 stock. Note the volume. Note the volume going into the first week of December. Okay, traders, that's going to do it for me for the weekend video. This is Cousin Vinny coming to you from theclosingprint.com on December 1st, 2019. We'll be sending out a watch list around 11:30 on the East Coast, 8:30 on the West Coast. Be sure to look for that in your inbox. This week, just to summarize, we're looking for bullish action. I'm just thinking that Friday's weakness had to do with month-end window dressing going into the first week of December. That said, we have to see it first, so price action needs to move higher. We'll wait for the opening range to see how things play out, and we'll take the trend that develops shortly thereafter. Take care, have a great weekend, and we'll talk to you soon.